Thank you for tuning into the Equity Channel, where we provide the highest quality stock market analysis to individual investors. Today, we're going to be talking about the current global economic slowdown. As you know, central banks around the globe have been raising interest rates in an effort to combat inflation. Corporate bankruptcies in the United States are at a decade-long high, and global manufacturing reports are contracting at an alarming pace, showing that there has been a meaningful drop-off in economic demand. On today's episode, we're going to do what we do best, tell you what's actually happening with our economy, and let you know what could be coming down the line for the United States markets. Before we get started, be sure that you subscribe and turn on your notifications, because every time we drop a new episode, money is made. Why do people continue to ignore all of the warning signs? Although the probabilities of a soft landing continue to fade, our hopes that one will actually happen continues to rise. Far be it from me to tell anybody how to feel. My job is to report the facts and let you decide for yourself what you believe is going on. Let's start with this. Over the weekend, we read over the details of a report written by the U.S. Central Bank's own economic staff. Within the report, they highlighted that the share of non-financial firms in financial distress has reached a level higher than most previous tightening cycles since the 1970s. The Federal Reserve expects a drop-off in business spending, stating that 37% of firms in the United States are in distress. In another quote from the Fed's report, the Fed's economic staff went on to say that access to external financing deteriorates more for firms that are in distress than for healthy firms, and policy easing won't make it any better. Monthly corporate bankruptcies in 2023 have ranged from a low of 50 businesses in January to a high of 70 businesses in March, with over 286 bankruptcies through the year to date. While we wait for the June figures, some notable names recently added to the list are Virgin Orbit, Lordstown Motors, and most recently, Tattooed Chef. Rising borrowing costs influence business investment, employment, and economic activity. The 4-week average for jobless claims has jumped 13% since the end of May, with the Employment Trends Index taking a 55 basis point decline on the latest report. Job openings are on the decline, and without a doubt, the latest jump in bankruptcies is not a case to be made for the labor market remaining robust. Further research this weekend showed that over 66% of U.S. stocks are currently unprofitable, with 27% of U.S. stocks seeing insider selling more than buying, and 32.7% of U.S. stocks showing institutions reducing their holdings. Lastly, let's talk about the leading manufacturing numbers that are being released globally this morning. There's no silver lining in sight, as the reports all showed there is a demand problem sweeping across the globe, leading to slower output growth and production. Keeping an eye on the German recession, manufacturers responded to sustained weakening in demand by making deeper cuts to their production as the PMI index fell to its lowest level in over 3 years. Final PMI numbers for the global S&P index is due to be released today at 9:45 a.m. Projections show that global manufacturing is poised to contract further on this report. I think it's important for Americans to also keep in mind that global trade adds to prosperity when it's booming, but hurts domestic production when it isn't. While it's well within our rights to say a soft landing is possible, we should be asking, is it probable? Thankfully, when the market feels like all things are fine, they often ignore investments they should be considering. So I will leave you with this. While all eyes are on tech and other fast-moving sectors at the moment, defensive sectors have lagged the market over the past 12 months. This could be an opportunity to take advantage of some mispricing and undervaluation before fears strike the market once again and sends others running for cover. I'm hoping the trading day treats you well and prosperity becomes you. Be sure that you subscribe to the podcast and turn on your notifications, because every time we drop a new episode, money is made.